Hello everybody, Sunil Thakur here, stsuretrader.com. Just so you don't get mistaken, this is the proper spelling of stsuretrader.com, and this is how our website looks like. You can notice we trade on a global perspective. By the way, those are candlesticks right there. We're trading on a global perspective regardless of what country you're in and what market you want to trade, okay? This is stsuretrader.com. For this video, this is the second video in the Technical Analysis Basics course, and I want to talk about peak and trough analysis. Before we move on, I want to remind you, you can go over to the Facebook group and download either the binary options tips. You can find the link here to get your virtual account for binary options. Scroll down and you have your account. You can get your account for contract for difference. We'll be talking about this too in a later video. They're both very good trading tools. They have their pros and cons, however. That's why I want you to get them both so you can understand it better. Okay, this is the binary options tips, and this in the US stock tips. You can download this as well, and you can find them here as well. You can click here for the CFD trading account and the binary options trading account. I give you my Boy Scouts promise. You're only getting a virtual account, a demo account to play with, to experiment with whatever I'm going to be teaching you. There's absolutely no obligations. Nothing to pay, nothing to lose, nothing to risk. So please get yourself both of the accounts, CFD and binary options. Sign up for both of them on a free or virtual demo account basis. There's nothing to lose here, and it will help me understand you better in the future, so when you ask questions, I know where you're coming from. I know what trading platform you're using, so I can help you better as well. You're doing me a tiny favor here. You're doing yourself a very big favor here, okay? So please get both of these accounts. It's just a demo account anyway. There's nothing really to lose. Now, for today, I want to talk about the peak and trough analysis, because I really want to drive home the three basic premises of technical analysis, which is price action discounts everything. Whatever has to be known is already known by somebody or a few bodies out there. Prices move in trends, contrary to what we learn in college. I graduated management, Bachelor of Science, specializing in business management in college, and I can tell you whatever they taught us in school does not really apply in the financial markets. You need technical analysis. You definitely need technical analysis if you want to make a profit in the markets. So you have to take these three basic premises into consideration. Price action, number one. Number two, prices move in trends. And number three, history tends to repeat itself. Let me show you that in a short while. First things first, I want to get you through the understanding of peak and trough analysis. In the first video, you have seen the three-line break charts. Well, I'm going to show you now another Japanese chart, Renko chart, But before we get to that, let me just show you what we mean by peak and trough analysis. Okay, how do you know a stock is in an uptrend? Well, you have higher peaks, consistently higher peaks, and consistently higher troughs. Sorry, my drawing is not really that good, but this is an uptrend because you have higher peaks and higher troughs, and it goes in a series all the way up until here. You still have a higher peak here, and at this point where you see my mouse is, would you say it's in a downtrend? No, it's still an uptrend because it has not gone below the lowest trough made just recently. It only goes down. This is not a down warning, it's not a downtrend warning, it's just a first warning signal. You're gonna have 3 warning signals before you know that it's in a downtrend. When you're coming from an uptrend, you have a lower trough than the last trough, you have a lower peak than the last peak, and then you have a second lower trough before the last trough. Okay, these are the 3 warning signals that the trend is changing, and you can see it generally moves down. And I'll show you real time how it works with actual examples later. Let me just show you first the opposite. Okay, if a stock is moving in a downtrend, you have lower peaks. Okay, the peak is lower than the previous peak, and the troughs are lower than the previous troughs, so it moves in a series. You have lower peaks and lower troughs up until about this point. Now at this point you get your first warning signal. This is just a first warning signal because it can make another lower trough. It can do that, and it can move sideways as well. You only know it has reversed from a downtrend to an uptrend when you see that the trough is higher than the previous trough, and the peak is higher than the previous peak, and then again you get your third signal here where the trough is again higher than the previous trough, and you have 3 rising troughs. Okay, now let's bring this home straight to the Renko charts. Let me just bring you back here to stock charts. Stock charts is a very fantastic tool. You really need to use it. Sorry. Excuse me. Whether you're trading in the Indian stocks, Indian stock market, or US stock market, or even commodities, or foreign exchange market, stock charts right here. Stockcharts.com is a very important tool to use. And don't worry, just like everything I give you, this is free with end of day data. It's absolutely free with end of day data. You really don't need real-time data anyway, at least not with what I'm going to be showing you. So here's what I want to show you first. Let's go on over to Chart School. You can see my mouse here, Chart School. Let's click on that and search Chart School. Let's type in Renko, R-E-N-K-O, Renko. Remember in the last video, the very first video we made a 3-line break chart, which is a classical Japanese chart using the closing price. And I showed you then like how well it catches to trends. It clings on to trends literally, and you can make a good profit just by using the 3-line break charts. Anyway, let's take a look at Renko. And you really want to click on what's labeled CS, because the others here are just blogs, and I'm really not very sure about these sources. You want to go for something that has CS, which is from Chart School, provided by stockcharts.com. Okay, so let's click on this one here, and now it gives you the information about Renko Charts. Okay, the Renko Charts are, I'm not going to read this to you one by one. I don't want to waste time. I'm not a storyteller either. Anyway, Renko Charts are similar in a way to the 3-line break chart that we looked at earlier, except that each bar or break, as Renko is called. Renko is a Japanese name. Came from Renga. It means bricks or boxes, blocks, whatever. Here you have the full construction description of how Renkos are made. Okay, we're going to be discussing more on Renko and how you can find the peak and trough analysis that I showed you earlier. You can use closing price. I definitely don't recommend using the high-low range, because it's gonna create a lot of volatility on your charts, and you're gonna have a lot more confusion than answers. You're gonna have a lot more questions than answers. So don't use the high-low range. Just use a close. The question is, if you're trading two different stocks, for example, and one stock is less than $100 or less than 100 rupees, you might want to use a $1 or a 1 rupee block size. But if you're trading something that's over $1,000, for example, or 1,000 rupees, you may want to use a $10 block size. But there's an easy way around it, which I'll be showing you. You can read all about this here in Chart School on stockcharts.com. And this is what I recommend you to do. Use the ATR. ATR stands for average true range. So you're taking into account the volatility of the stock itself, how much it fluctuates on a high to low basis, on a day-to-day basis. For the past 14 days, you're going to be getting an average of that, and that will be your brick size or block size on the Renko. Okay, so I'll be showing you that one right now. You can just read through about this on your own. Please do take that time. Do that one. You can apply Renko charts on weekly and daily charts as well. And you learn about support and resistance and trends. Trends I talked about in the form of peak and trough analysis. You can see peaks, trough, peak, trough. This isn't troughs really, because it didn't go beyond 25%, or it didn't even touch 25% of the previous peak. So this one here is one whole peak. Okay, these are not valid troughs. These are just blips. You can say this is a whole peak. These ones are troughs. Okay, this is a peak. This is a trough here, and you get the idea, I hope. If you don't understand, please do put a question in the Facebook group so everybody could also see it and learn from it. Now, let's go over to the chart itself. Let's go over to the free charts. Let's say you're looking for Maruti Suzuki. Type that one in, Maruti, and there you have it, Maruti Suzuki in India. Okay, these are candlesticks. We'll be taking up candlesticks in a later video. Let me just go straight here to Renko Charts. Renko ATR 14. You always want it to be 14 when you're using ATR. The average true range of the past 14 days or the past 2 weeks more or less. Let me just get rid of these moving averages so we don't get confused with the charts. Okay, and we click on update. By the way, ignore this top part here. This is RSI. We'll be talking about that in a later video. And this is MACD, moving average, convergence, divergence. We'll be talking about that as well in a later video. Now let's look at Maruti Suzuki. The price is most important, remember. So here we have valid peaks and troughs and showing to be in an up range. This is not a valid trough. Okay, these two dips here, these are not valid troughs because they didn't go through at least 25% of the previous range. Okay, so this is one whole peak. You can virtually put a line here. I'm very new to using stock charts, so anyway, this is virtually a line here. I hope you can see my mouse. This one here is a valid trough because it did penetrate at least 25% of the previous peak. This is a new peak, this is a new trough, and despite these tiny blips here, we have 3 tiny blips here. This is an uptrend. So what's Maruti Suzuki doing? It's in an uptrend. Just to show you, compared to our previous video, the 3-line break. Let's look at the 3-line break and update it. There you go. Indeed, Maruti Suzuki is in an uptrend. This is probably the dip that we looked at. Okay, came from a downtrend, then up and down. You can see the peak and trough here. This is a trough, this is a trough, this is a trough, this is a trough, this is not. So you can see the peaks. Here's your peak, this is a second peak, this is another peak, and you can see clearly it's in an uptrend. So what do we do with Maruti Suzuki? Well, it's in an uptrend right now. That's what we see. Okay, let's take a look at another chart. Let's look at something from the US. Let's say Amazon. Okay, there's a 3-line break of Amazon. Again, you can see the there's a peak, a trough, a peak, a trough. This isn't really a trough because it, well, I'm not sure if this was 25%. I'd consider this one as a peak and a trough. this is a peak and this is a trough. Okay, this was a false signal here. Like I said, sometimes stocks throw you a false signal. There's a higher peak, a lower trough compared to the previous, and a lower peak compared to the previous. But again, there was no third signal that this is falling. You have to wait for the third signal. In this case, it didn't happen. You can see here clearly. Okay, so again, it went up on the uptrend, and this is not trough. So uptrend here. Again, this is not a trough. This is less than 25%. So generally, you have a solid uptrend with Amazon using the 3-line break. Let's look at it using the Renko. And if you're not sure on the box size, you can use points, but you know, it's very subjective. People have a different idea of what box size to use. The best to use is, since you have the stock charts on your favor already, just go ahead and use the ATR 14 period. That way you can take into consideration the volatility in the stock itself. Let's click on update so we can see Amazon's Renko charts. Here we are. You can see that there is a solid support zone right around $300. Okay, in the past, although it has been trending down, the support zone held very solidly at $300 per share, and then now you have a peak and trough again. I don't really consider these two blips here as troughs because they didn't penetrate 25%. So it moved from here to here. This is a trough. So this is a peak. This is a line here. This is a peak. This is a trough. This is a peak. This one here, yes, it looks about 25% more or less. I'm not very sure. And then you have a peak. Again, you have a blip there, but you know, it's still in an uptrend. Okay, so this is the short video number 2 on technical analysis basics. Please do sign up on our Facebook group, and please do register for your demo account so you could use whatever it is I'm teaching you. You could actually use it on a virtual account without risking anything whatsoever. There's nothing to risk, nothing to lose. Sign up for the demo account, please. You'd be doing you and me a big favor. And in the future, you have any questions, you can always post it and I'll be able to answer it. Thank you very much for watching this video to the end, and see you again in the next video. We'll talk more about candlesticks hopefully by then. Bye bye.